Hello, I'm Liam Dann, New Zealand Herald Business Editor at Large, and welcome to a new season of Money Talks. This is a podcast about money, but we're not going to tell you how to get rich, and we're not going to try and pick the next interest rate move. In this series, I talk to interesting New Zealanders about how money has shaped their lives and what they've learned about it over the years. For today's podcast, I'm joined by Jo Townsend, who was last year appointed the Chief Executive of the Guardians of the New Zealand Superannuation Fund, or as you may know it, the NZ Super Fund. Kia ora, Jo. Welcome to Money Talks.
Thanks very much for having me, Liam.
I spend a lot of time looking at the Super Fund and things, but for those who don't know much about it, how would you explain your job to a child?
So the New Zealand Superannuation Fund was set up a bit over 20 years ago now, and the idea of it was that it was a pot of money that the government would contribute early on, that would be invested over a very long time frame, with the aim of helping to pay the cost of pensions in the decades to come. And so it very much is a mechanism for smoothing the cost of payments for future taxpayers here in New Zealand.
Sure. So the Guardian, but are you, as the CEO, are you the Guardian, or how does that work?
So the New Zealand Super Fund is actually just a trust structure that holds all the investments, and everyone who works for the Guardians and the board, effectively the Guardians is the overarching entity that invests the New Zealand Superannuation
Fund. I see, so that's the entity. You're the executive manager of it.
So we are the Guardians. We call our staff the Guardians.
And for those who don't know, it's quite a lot of money now. It's 80 billion-ish?
Yes, so around $80 billion, and has been very successful over the period of time that it has been investing. So
what's the rate of return is much higher than has been for the super fund, much higher than you'd get from a bank, but also from a lot of the KiwiSaver funds and things.
Yeah, well, that's partly because of the true long-term investment time horizon that the fund does naturally have.
So what is the sort of average return for it?
So over the past few decades, managed to deliver about 10% per annum, which is really quite a strong return. In order to be able to do that, you do need to accept that you do need to take quite a bit of investment market risk. Yep. And so our starting position is to have an 80% weighting to equities in our portfolio. And then we will make investment decisions based on our expectations that we could potentially earn a slightly better return than our benchmark.
Yeah, so it's like being in an aggressive KiwiSaver fund, I guess, because you've got the time.
Yeah, but with that, you've really got to have the long time horizon, and you've got to have the governance and the frameworks to be able to see through, markets that invariably are volatile all the time.
With that long-term time frame, how much do you worry about, like the last few weeks, last few months of real volatility we've seen with the US tariffs roiling markets?
So we have a number of strategies across the fund. We actually do have a couple of specific strategies that are very much built to take opportunities in times when there are market volatility. So, certainly there were teams in the business that were extremely busy around the time that Trump announced his tariffs. But, we see market volatility as an opportunity that we can actually, add value to the fund.
Because you can ride through it and you can see that, it's going to come back. So that thing where it's a buying opportunity when the market falls, you're able to look at it that way.
And it's not based on a short-term view of what markets will do tomorrow or next week. It's a very systematic approach that we have. Sometimes we just, because of what's going on in markets, different investments will become cheaper than what they were, and we'll actually see them as being good value. And so, to the extent that we've got a very stable cash flow profile at the moment where we know that we're not going to have substantial withdrawals out of the fund for at least another 2 decades.
Yeah.
That gives us a level of confidence that we can manage through market volatility.
Yeah. So going into managing something like that, what's your sort of money personality? Are you a high-risk investor, or are you a saver or a spender?
It's interesting because I've worked all the jobs I've had, or most of the jobs I've had in the investment world, I'm very comfortable working in a very long-term approach where, you have to sometimes, invest when markets are falling and take quite a bit of risk. And, I understand entirely that, that can be an uncomfortable position, but sometimes that can be the best way to make money in the future. In terms of, my personal investments, when it comes to debt, I'm really quite risk adverse.
Right,
I don't like a lot of debt personally. You know, I have a mortgage like everyone else, but I don't have multiple mortgages, and I don't do other things like that. You know, investing can be hard. I generally leave, investing to people who actually work inside of investment teams, and so I access, markets broadly through KiwiSaver here in New Zealand, superannuation in Australia, and managed funds.
So there's sort of a divide between the professional world and the kind of, you can have two different approaches, really.
Yeah.
Just to go back and get a bit of your background, what are your first memories of money and growing up with money? And I'm guessing this was growing up in Australia, right?
Yes, in country Tasmania, actually.
Wow, so it's pretty rural.
Yeah, very. And, money was certainly not plentiful in our household. My parents had both left school really young. And went to work, had a family, worked extremely hard, but were never in a position really where they were business owners. They were both doing relatively manual jobs.
Yeah.
And so, money was something that was never just taken for granted in our household.
Yeah.
To have a holiday, for example, I remember we had a holiday back in the days where you had to do 4 flights to get from Hobart to Cairns.
Wow,
And I remembered that my parents were saving to have that trip for about 3 or 4 years.
Wow, yeah. So growing up, was there a sense of, did you have pocket money or did you have to get part-time jobs? Or?
Well, I had little bits of pocket money, but it was certainly nothing substantial. I remember that in school holidays, wherever my father was working, whether it was an apple orchard or, a manufacturing plant, he would always take me and, I'd work for 3 or 4 hours and, just do little jobs to earn some money, and that was, the primary source of additional funds that I ever had.
Yeah, I mean, what was life in Australia like in those days? I mean, I guess in looking across the Tasman, we always think of Australia as better off than us, wealthier than us. We can talk about that later, why that might be, but yeah.
Yeah, well, I mean, in country Tasmania in, the 1970s, it was actually pretty tough, and certainly our family circumstances were there as well. I moved to Sydney in 1987, and part of the reason that I did that at the time was because I wanted more opportunity.
Yeah.
And so a key theme throughout my career is that I've always been prepared to move around quite a lot to take advantage of opportunities. So I've gone from Tasmania to Sydney, back to Tasmania to Sydney, then I went to Adelaide, and now I'm in New Zealand.
Yeah. I mean, well, I was going to ask, did that thinking about money and I guess wanting to have more opportunity, did that affect your choices, subjects at school and your university choices?
Yeah. So, yes, it did. But at one level, I wasn't lucky enough to have the choice of going to university. The attitude in our household was, study really hard at school, get the best marks you can, but then you finish year 10 and you get yourself the best job that you can.
Yeah.
And so, I won the typing shorthand prize at school.
Right. Yeah,
so,
I got a great secretary.
Exactly.
PA, I guess.
I was a really good secretary. My brother got an apprenticeship, and so it was those sorts of jobs. And so it was really only when I was in Sydney and I landed myself a role at Rothschild Asset Management in the early 1990s that I discovered the world of finance.
Right, yeah.
And I realised that I had left school far too late.
Yeah.
And I didn't go back and start studying really until I was 24.
So you went to Sydney with clerical skills and worked in...
Yeah, no, I did administrative jobs. I worked in a whole different range of organisations. I used to like doing temp assignments where you'd go into a company for 3 months or 6 months and then move on.
I did the same thing in London, actually, and that's kind of what got me into business in a way. But
and I met a lot of people. I got to, see companies that I'd never been exposed to when I lived in country Tasmania.
It kind of opens your mind to this whole other... presumably you hadn't really been exposed to any of that world of finance and then suddenly you're watching it all.
Well, and when I was at Rothschild as well, I actually started in the marketing department. And then I I took on a role on the Treasury dealing floor. So there were people dealing currency and buying gold and selling bonds. And, that was a whole new world to me.
Yeah.
This is back in the days where you actually could go to the stock exchange and see people on the floor. Yeah. So, that was just mind-blowing for me at that point in time, and that's where I really discovered that I quite liked finance and I was reasonably good at it. Because I'd left school in year 10, I couldn't get automatic access to a university course. I actually had to do an industry course to prove that I could study. So I ended up working full-time and studying part-time for 10 years.
Wow. Yeah.
Before I did that course to get into a university degree, and then I actually did a degree.
Yeah.
And so whilst I was studying, I was actually working. By that stage, when I started doing my degree, I was actually working as a bond trader.
Wow, so you already knew the ropes, because I've always thought there's the theoretical skills, and then there's there's something about trading in particular that's it's got to be a bit intuitive. Right? But it's a bit like sports or something. You've got to.
Well, I could see the purpose behind what I was studying. Like I really understood why you needed to be able to price a bond the way that you did.
Which is then it's useful and interesting. Whereas if you've just come out of school straight into uni, then it's possibly a little bit harder to see. So and I saw that you did maths and finance.
I did.
That right? So that you must have a bit of a knack for maths, because that's not easy at that level.
Well, I'm really quite stubborn. Yeah. And I was quite determined. So I decided I was going to do maths and finance rather than a business degree. Maths does not come naturally to me, but I was so determined that I was going to get through. I did really well. Do I remember a lot of it today? No, I don't, but it did help me assist my son very much with his maths through school.
And I guess you think it gives you a foundation in some of the more technical.
It teaches you to think and to break down a problem in a very logic way. That's probably the main thing that I have taken away over the many years since I stopped studying and have been able to apply.
Yeah. And take me through a little bit the journey, just quickly through from, I guess, getting out. You're working in Sydney, completing a degree, and then to end up in New Zealand at this high level. Obviously you've made some leaps along the way to get into the executive level.
Yeah, so I went from Rothschild. I was still working in the fixed income area. I was actually a business owner. A couple of the people that I worked with at Rothschild spun out and created their own business, and so I went with them, and I was there for 5 or 6 years. Then the opportunity came to go back to Tasmania. Ageing parents and, other broader family down there. So went back to Tasmania, and that was a point in time that I moved from actually being an investor, so working in a fixed income environment, into the superannuation world. And so that transition, you very much have to move from being a technical expert to being a generalist. So, I had to learn about equities and property and infrastructure and all those different asset classes. So I was back in Tassie for a while, and then went back to Sydney and was working at Rest Industry Super, which is one of the big superannuation funds there. And my role there was, after a while, it was General Manager Investment. So I was building a team underneath me, and I very much sort of over time was able to take on more management and leadership roles, as well as having the investment technical background. I also, for a while there, took on a role as Acting Chief Operations Officer, which was really quite scary because I didn't know a lot about operations, but my main role there was to manage and lead that team and
that's
to represent
more business management, isn't it?
So that was it, and that was actually really interesting for me, because it was sort of at that time that I realised I was actually more interested in management leadership roles rather than the actual potentially Chief Investment Officer type roles. Yeah. So it was around that time that the role of being Chief Executive Officer at Funds SA came up. And so Funds SA is a state-based sovereign wealth fund. So it's very much similar like the New Zealand super fund, but smaller. So it was about $40 billion when I left. So I was there for 8 years. had loved that job, loved living in Adelaide, had decided that for personal reasons it was just time for me to have a break.
Yeah.
And my plan was I was going to have a break for a year and go and have lots of holidays. I got about 4 months in and I was contacted about the role here at New Zealand Super Fund, and I'd sort of realised that I wasn't really good at doing nothing.
Yeah, 4 months is long enough.
And, I fundamentally really enjoy what I do for work, and so the opportunity to work for the New Zealand Super Fund, which has a great reputation internationally, was almost too good to be true. So, that once I started talking to them about the role, it actually happened relatively quickly.
Yeah. I've got to ask, there's sort of, I hope it's better now, but, as a woman coming through all that, especially, finance in Sydney in the 90s and all that sort of stuff, was it a pretty tough environment? I mean, it was a very male world for a while. I don't know if that's changed.
It still is. It has changed a little bit. Was it tough? I just didn't let it worry me.
Yeah.
I remember saying to someone, a young male colleague once, that I'd just been to a lunch where there were 20 people and only 5% of us were women.
Yeah.
Which meant, somebody said to this young gentleman, do you understand what Jo just said? And he said, yeah, she was the only one there. One of the real challenges, and so what I have tried to do as I've sort of had more influence and control, is to try to find ways to not only, get young women into the investment industry, but actually to support them. So, a lot of, there are, there certainly used to be and there is still, but, there are a lot of young women who come into the industry, but then because of caring responsibilities or, other family circumstances, they do drop out. And so, things like workplace arrangements that actually support having families and working as well are really important. Myself, for most of my career, my husband was a stay-at-home husband. So, it is really hard where you want to have a family and you want to work as well. So it can be really challenging to have everything, as you say. Yeah. So, it's a matter of what works in different circumstances for different families. And the other thing is that, just not only supporting women that are in the industry already, but actually, demonstrating to young women that finance is an attractive industry because, it does wax and wane, the sorts of industries that people are interested in coming out of uni.
Those challenges, especially in New Zealand, I think, I feel like Australia's a bit more sophisticated, but, more broadly, the entire population, getting them to understand that finance is important, is interesting, and to think more proactively about investing for their future and all that sort of stuff. Do you think it's fair? I look at it and think of Australia as a bit more advanced and a bit more sophisticated in the way that people look at investment, and maybe that's because of the compulsory super.
Yeah, well, I think that's a fair call because you look at how the capital markets in Australia have actually developed because they have had mandated superannuation for so long. And, my son, when he got himself a part-time job in a burger place, he's been contributing to super since he was 16 and he understands it. And, I've always talked to him about compound interest and, we do nerdy maths things together where I prove it to him. Anyway, that's
showing people the exponential growth graph is a good way to get them eyes open, right?
Exactly. So. But the other flip side of what's happened in Australia with the superannuation growth is that there is so much of that money in the system that, there are, questions being asked around systemic risk, for example, and where do those supers actually put their next dollar?
Yeah, and I suppose that's part of the challenge for super funds generally. You guys, there's often political pressure, talk about whether the New Zealand Super Fund should be investing more in New Zealand or more in infrastructure. You probably are involved in New Zealand infrastructure.
So we have a lot of money invested in New Zealand. So if I start with our benchmark, New Zealand is only a small country in the global pool of potential investment. So it only represents 0.12%, so it's tiny. By contrast, we actually have 11% of our investments here in New Zealand. And so it's about $8 billion. It's a combination of listed equities and also a lot of direct investments as well. So things like timberland, rural properties, platforms that can potentially support housing further down the track. So, we would love to be able to invest more in New Zealand. It's about having the opportunities to earn that commercial return that is going to contribute, compared to our
sort of spiral upwards, doesn't it? I mean, the government's talking about getting stuff going, getting more money in, but
and as an example of something that we're working hard to try to develop here in New Zealand, we're in a joint venture with Copenhagen Infrastructure Partners to develop offshore wind at Taranaki.
Yep.
And so, if that actually goes through, that will be a major contributor to adding to electricity supply here in New Zealand.
Yeah. No, that's great. I mean, I guess there would be, you can't overdo it, or you've got, the primary thing is you've got to guard that money, you've got to make more money. So it's a balancing act between the total returns, just going for returns, and then sort of factoring in the public good aspect.
Yeah, no, that's exactly right. And so, we have every expectation that we will continue to add over time to our investments in New Zealand in dollar terms. The real challenge that we have is that because the fund is growing at 10% per annum, which is a faster rate than the New Zealand economy, the percentage of the fund has actually declined over time.
Yeah.
But as I said, in dollar terms, we certainly do expect that amount will continue to grow.
Yeah. I mean, we talk about New Zealand briefly had a compulsory super scheme, and it was killed off in the 70s. And one of the things that the Rob Muldoon government at the time was convince everyone that the fund would eventually buy everything in New Zealand and would run out of things to buy, and that would be effectively communism. And I think it was because they couldn't see, back then they didn't see that we would be investing out in the world. The world was, a kind of like, so the big funds, the big Australian fund, the big Canada pension funds, and the Scandinavian ones and so on, that they are, they're out there buying up other parts of the world, and it draws money into the economy, right?
Yeah, no, that's right. And, the Australian if we just talk about Australia, the Australian superannuation system is larger than the Australian stock market now.
Yeah.
And so, they are being forced to go.
It's like $1 trillion or something, isn't it?
There are $4 trillion for superannuation. Yeah, so they are being forced to go overseas. For us, one of our challenges is actually getting investments of sufficient scale, because the way that the fund is set up, we are about 20% of New Zealand GDP now, and forecast to peak at, I think, about 37% of GDP in 5 decades' time. But then we'll continue to grow into perpetuity.
Yeah.
And so, in the decades to come, when the fund is meaningfully paying contributions back to the government to help pay pensions, the numbers are just staggering.
Yeah. There's a lot of debate about superannuation, the actual, the pensions themselves. Are you able to engage in that? Do you have any views on whether we're going to be able to whether the numbers are going to stack up in terms of, us being able to sustain unmeans tested universal 65?
Yeah, well, obviously there's differences here in the New Zealand market compared to, Australia, which I know very well. Ultimately those sorts of policy questions are a question for government.
Yeah.
We're always happy to engage, but at the end of the day, we've got a really big job to do the best that we can managing the New Zealand Super Fund, and so we're very focused on that.
So some of our quickfire questions. What's the poorest you've ever been?
I remember having to eat muesli for dinner, and by the same token, I remember that there were days when I normally would have rice with chicken and satay sauce, and I had to have some days where I just asked for the satay sauce on the rice.
Yeah. So was that when you were first in Sydney, or what was that?
Yeah, when I was first in Sydney.
Yeah, so that was just getting set up. And when you got into the world of finance, there must have been, the paychecks must have got better. Can you remember, what was the most indulgence purchase you can remember making?
I wouldn't say the paychecks got automatically better.
Yeah.
And, I never... I don't really spend a lot of money on indulgences as such, but, more recently, probably, I like to occasionally buy myself a piece of jewellery. But I largely buy silver jewellery rather than gold. It's nothing terribly expensive, but I think that is a very special thing to take yourself into a jewellery shop and, buy.
So you're definitely more of a saver than a spender.
It depends. I have managed to instill a saving approach in my son. I naturally am a spender, which is why I'm a big budgeter. Yeah. I've always had a budget to make sure that I've got enough money and I can always pay my bills.
Yeah. I mean, what's the best piece of financial advice you received?
Have a budget.
Yeah. Sounds good.
Aside from power of compound interest, of course.
Yeah, sure. Yeah. Is there anything, if you could go back in time, that you'd change about your career or your money habits?
Oh, well, I would have tried to find a way to go to university earlier than what I did. I really missed out on the uni life where,
I suppose, right.
It was hard graft working full time and studying.
But then on the flip side, you could see the purpose to doing doing complex bond equations.
Exactly.
So when you're in the world of money, you're looking after a lot of money. Is making money important to you, or is that more of a byproduct to the success?
It's really important, I think, when you think about the finance industry, to talk about the different parts of it, because, and this goes to, the conversation we're having about work-life balance. In some finance environments, it's really cutthroat and you've got to work extremely long hours, and yes, you get paid really big dollars, but having a decent life can be difficult. For me, having, a nice life as well as having a job that I really enjoy has always been important. And so, that's the primary thing for me. If money was, the driver of everything, then, I wouldn't have stopped working and decide to have a break and, think about what I want to do next. So for me, it's, work is always has been such a big part of my life that it's always really important that I've got a job that I really enjoy. And in order to do that, you can get yourself into trouble if you think that you should just chase the dollars.
Yeah. Look, our final question, it's probably a difficult one for a high-level public servant, but, there are ways to approach it. If we made you Prime Minister for a day, or maybe we make you Prime Minister of Australia, and then you can deal with Australia's problems, but what are the things you would want to focus on to try and, solve inequality, get people more focused on managing their money and creating wealth? So
I think... and through my own experiences, I really place a great importance on the value of education. And so, extending that to the finance world, the importance of financial literacy inside of schools, I think is probably, really important area.
Hey, that's brilliant. Jo Townsend, thank you very much.
Thanks, Liam.
Cheers.
Cheers.
Thank you for listening to this episode of Money Talks. If you want to get in touch, drop me a line at liam.dann@nzherald.co.nz, and you can read more from me at nzherald.co.nz. Thanks to my producer, Ethan Sills, and sound engineer, Adam Pamana. Follow Money Talks on iHeartRadio or wherever you get your podcasts, with new episodes available every Thursday. And if you are new to the podcast, you can check out our back catalogue with over 60 guests from across our seasons.